What's up, guys? It's Cash Flow Cart. Today we have a big video. We have the April dividend portfolio review. This morning I had an interview actually with the apartment leasing office I stay at. I'm trying to get another job before I graduate to try to save up some more money. So, we'll keep you guys updated on that. I'm sure you definitely care. But let's get into it, guys. I'm using TD Ameritrade's income estimator. Investing positions, you can see down here, this is my actual positions. This is not a fake channel. We really do this here. Guys, estimated annual income in a yearly basis is $2,262. That brings us to $188.50 monthly. I'm trying to get that number to 200. That would put me at a grand total of $2,400. That's the short term goal, guys. We talk about it a lot on this channel. Goal setting, small milestones, whatever you need to work towards, and whatever keeps you motivated to stay in this game for the long term, guys. It's going to start to add up. If you're just starting out, maybe it's $10 a month is your goal. Or, after that, maybe it's $600 a year. That's $50 a month. All right, enough yapping. Let's get into it. This one's interesting, guys, because we've talked about in the past. Usually my number one position goes to Realty Income or Apple. Those two are typically kind of neck and neck. However, we have seen Altria, pass Apple for that number two spot. Altria right now is up to $44.64 a share. It was hanging out around kind of that $40 mark. We do see, a little bit of bullish momentum with it. I'm excited about that. I think it's right at my cost basis. Probably about break even on it right now. We will go through the charts later, but, right now, let's look at this. So the number one position in this portfolio, guys, Realty Income. That's a market value right now of $11,201, and it pays me $663 estimated annual income, guys. That's pretty awesome. That is a monthly payer. So these paychecks come out to about $55 every month on the 15th or those whereabouts of the month. So, seeing that recurring stream of that one, I do like it. It is my only monthly payer, guys. Next up, we have Altria. We just discussed the recent spike in Altria has taken it to the number two spot. The market value here is $11,158, and that pays me an estimated annual income of $980. It is important to note with Altria, the dividend yield now is 8.78%. We have been seeing that yield closer to that 10% mark while Altria was down around the $40 level. I was trying to nibble some more shares, lower my cost basis at that level, and I will continue to do so if it continues to hang out kind of in this low $40 area. Granted, I do have kind of a big chunk of my annual income coming from Altria. I definitely see the risk reward for this one being, very attractive to me as an investor. And especially if I can lock in shares at like a 9.5%, 10% dividend yield, it's something I'm interested in. I'm going to be watching this one closely just to see if I can, continue to build this one. But I'll keep you guys updated on the channel. This is my personal opinion. I do think Altria has hit kind of a long-term bottom. And I think that's due to the fact that they typically try to buy shares back around that $40 mark, as well as, their dividend yield has kind of hit this point where anytime it hits that 10% level, it seems to not want to go any lower. So what happens when Altria is hitting that 10% dividend yield? Dividend investors like me, like you, we're coming in, we're putting in that buying pressure, and it's able to recover. I do think Altria is at kind of a long-term bottom, guys. Again, this video is for entertainment. That is not licensed financial advice, but you guys get the gist. Next up, we got Apple. I just had a really good video come out in March about Apple and how, a lot of investors are seeming to forget the amazing top line growth as well as strengthening margins in this one. And it seems that a lot of negative sentiment has crept into investors' heads lately. And we tend to forget that Apple reported their best EPS ever, and on their earnings report in February. So, I'm still proud to be an Apple shareholder. I'm currently letting this position just ride. I'm not selling, but I'm also not buying. I think we would have to see a lot more negativity around Apple for their share price to get to more of an attractive level for me. As well as I think if that happens, it'll be kind of like a broader market type correction. We'll just have to wait and see. Again, with Apple, I'm holding it. That's an $11,000 position that pays me $60 annually in estimated income, guys. Next up, we got Microsoft coming in at $8,428.20. This one also pays me $60 in estimated annual income. You can see the yield is a little higher than Apple's. That's why, those payouts are so similar. Again, with Microsoft and Apple, I'm not interested right now in adding to either of them, guys. Tech has been kind of on a tear in 2023 and year to date 2024. And with that in mind, my focus as an investor, I want to be very opportunistic. My focus has not really been in, the tech sector. Okay. With that being said, I'm not trimming. I'm not selling. I'm enjoying my cost basis. I'm enjoying, I guess, the relatively small dividend income from these. But moving on, guys, we got Starbucks, $5,679. That earns me an estimated annual income, guys, of $141.36. I actually haven't checked on Starbucks in a while. I probably am due to do some due diligence. Wow, that was a tongue twister, but just with the boycotts and everything, I have seen a lot of negative sentiment come out about Starbucks. However, I'm a proud shareholder. I like to look at things, on an annual basis or maybe even a quarterly basis. And if I'm in a stock and I believe in it long term, they have that wide economic moat. They have that supportive free cash flow of their dividend. Then I try not to get hung up on, short-term news. With that being said, I definitely have been slacking on my Starbucks due diligence. But that's okay. I've got time. Moving on, guys. Pfizer, $4,752.36. That brings me an estimated annual income of $289 on this one. And guys, I am excited about Pfizer. I'm really interested in building this position. I'll pull it up real fast. You can see my trades are showing up here. Hopefully that's not too distracting, guys. I am planning to do a full video on Pfizer. You can see I was a little early to the trigger on this one. I saw kind of the foregone COVID revenues. I saw kind of the, okay, COVID's not sticking around as long as, we think, and this kind of started a sell off with Pfizer. And then we had the Seagen acquisition go through this past year. That's really hitting their net income because they had this big acquisition. I think Pfizer right now is at a bottom. I think it is, bang for your buck. I think it's a great value play right now, and I'm definitely going to be interested in adding more. I mean, as you can see, guys, since I've started buying this one, I've pretty much bought it, every week thereafter. I'm going to continue to do so. Hopefully, this is a bottom, and hopefully, I'm able to kind of average through here, build a good cost basis, and lock in, a 6% yield. I mean, what's the yield right now? 6.08%, guys. I've been trying to pick up shares of Pfizer with a dividend yield at or above that 6%. I've just been buying it, hand over fist. And although my cost basis isn't perfect, because I did mention I was a little early on this one, that's part of this game. All right. We're never going to call some perfect candle where we can pick a bottom and lock in some perfect play, guys. It's more about having that conviction, having that long-term consistency, and that's how you can get kind of these plays with a great yield on cost as well as, capital gains. All right. So, let's not turn this into a Pfizer video. However, I am really hopeful. I'm really excited about Pfizer, and I'll definitely be continuing to buy this one, at least in the short term. Hopefully we see it kind of turn around. I do get a feeling that investors are kind of realizing, okay, maybe we have overreacted to some of this stuff. Okay. We've talked about it before on this channel, but typically in the healthcare industry or healthcare sector, we typically see, an overreaction to negativity and negative news. And I am going to drop a whole video, like I said, about Pfizer, about kind of the lens and approach we have to use with healthcare stocks. So stay tuned for that. Maybe hit that subscribe button, guys. That'd be awesome. But again, we're not turning this into a Pfizer video. Next up, we got Rowe Price. That current market value is $1,263, and that currently pays me $55 in estimated annual income. I am interested in building this one, and I've mentioned it before. I want to continue building it, but a lot of times when I get capital, I've noticed my attention right now has been more on Altria and Pfizer, which I need to make sure that I need to make sure that I pick up more shares of T Rowe, guys. I mean, this is an unacceptably small position. I have a conviction in this one. I want to build it. I've been a little uneasy, and I've let my focus go to Altria, Pfizer. I'm also pretty interested in revisiting Realty income, seeing if I can bulk up that position. But again, it's my number one. So, that's when your own personal risk tolerance is going to come into play. I will continue to build T Rowe. We'll just have to see where's it hanging out at right now. 115. Okay, so unfortunately with this one, my cost basis is $104 a share, and now it's already gone to 115, and I feel like I just started building this position. But, unfortunately, that's something we have to face as investors. It's like you can never get this. Like we mentioned with Pfizer, I was too early. And now with this one, I feel like I'm maybe too late. But, it's about having that conviction. It's about building out these positions. And, if you stay consistent, you will be able to lock in the best cost basis and the best starting yield you can. And that kind of brings it back to make sure you're not looking at too many positions at once, because, these can move pretty fast. And the reality is, guys, for a lot of us, I know for me at least, we don't have capital all the time to be building, 5 positions, 6 positions. It's like we might be focused on 1 or 2 tickers for, a series of months. Okay. And like I said, we're not going to be able to time the market. So if Pfizer stays down and it stays attractive, that becomes a game of how much of this can I pick up? How much of this am I willing to pick up with my risk tolerance? So, even when I have like 3, maybe 4 stocks on here I'm willing to buy. It's tough to spread my capital to all of them. But then on the other hand, we'll see like other investors or YouTubers recommending like 5 stocks to buy right now, 5 stocks to buy this month. Guys, come on. I mean, I know this is a tangent, but I think you get what I'm trying to say, guys. If you focus on building your conviction in those 1 or 2 opportunistic positions, guys, that is going to work out best for you. This is a long-term game. We have time. If you're interested in Apple, if you're interested in Microsoft, we have time for the tech sector to kind of rotate out of favor, for it to correct a little bit. We already see it happening with Apple, but take your time, try to get the best bang for your buck, guys. Again, that was a tangent, but anytime I see something real time like this, I kind of just like to keep you guys updated on where my head's at. So that's how I am with Rowe Price. I want to build it out. I want to continue doing it, but unfortunately, Pfizer's kind of stolen a lot of my focus in the past few weeks. So, again, we'll have to see what what June has in store. And then lastly, guys, we got Coca-Cola. Um, this one's not going anywhere. It's a very small position. I have 7 shares for a market value of $421.61. That only brings me in $13.58 annually. This is one that I love Coke. I love the company. I love the product. I love their wide economic moat, and I do reference Coke as like a good teaching point type of stock in a lot of my videos. However, with that being said, I do feel it trades at kind of a premium, a relative premium for the quality of the brand, and I'm not in any rush to build this one out. At the same time, it's not going anywhere. I guess kind of my plan for this one is like over the years, it'll slowly kind of move up in the rankings. I'll be able to pick up shares on dips. I don't know what car that was, but that was a fast car. Anyway, that's kind of my plan for Coke, but again, it's not taking up too much of my attention right now, guys. So that brings the total portfolio value to $53,995.92. Just under that $54,000 mark. It's been kind of flirting with it. And anyway, guys, that is the April portfolio update, guys. This was an exciting one for me to film. Thank you for tuning in. If you are subscribed, thank you so much. I could see like the analytics on these videos, and the subscribers, always treat my videos the best. I mean, that makes sense, but I just want to say I appreciate my subscribers, guys. You guys are the best. I'm having a lot of fun with this, and I've got a lot of big plans for the channel in the future. So thank you for rocking with me, guys, and I will catch you in the next one. Everyone have a great day, and let's build wealth.